Good day, everybody. Chris Herline here of REAP Financial coming to you with this week's Wealth Report. Today is Friday, March 7th, 2025. What I'd like to do today is talk quickly about 2025 market conditions and just some of the things that we're thinking about. And I think that the biggest thing I want to point out is the market has just managed to continue to climb. And I think going back to, 2023, maybe even just a touch earlier, it's really just climbed this big wall of worry. And you may have heard of that. Bull markets climb a wall of worry, and that's certainly what's been happening. So what are the concerns floating around out there? Well, just turn on the news or read anything, and it seems like everything is about the bearish case on the market. It's inflation concerns, interest rate concerns. What about the tariffs? Are we going to have a recession? Maybe the idea that the index has too many tech names at the top. The market's too complacent because a lot of people point at the VIX being kind of at these historic levels. So it's really, really easy to paint a bearish picture as we are already in March of 2025 here. But let's just be very conscious of the fact that the market is notorious for climbing walls of worry. Okay, but with that said, a couple of things that I'm really keeping an eye on. You can take a look at this chart, and you can see going back to even the pandemic, even with the volatility lift in 2022, we've basically been in a long-term, let's call it about 4 or 5 years now, a secular decline in equity volatility. And that's pretty normal. So if you think about volatility regimes in the market, it tends to be about 4 or 5 years of kind of slowing or lower volatility, and then maybe followed by a year where there's just a reset higher. So if you just look at that long-term chart and you see that we've kind of, from a basing perspective, looking at volatility, it's hard for it to really go much lower than where it is right now. The long-term average of the VIX is around 20, which is right about where it was when I pulled this chart. Anything below 15 is considered very, very low. So it's going to be hard for this to get much lower than that 12.5. It got below 12.5 in 2017, but in my experience, that's very unusual. So I think the likelihood as we continue into this year is that we're going to see things continue to bounce around from a volatility perspective, not a market perspective, between the low 20s and maybe the mid-teens. We would probably start to become more concerned when the volatility starts to have more of a floor at 20. So right now that ceiling is more at 20. Once you see that flip and all of a sudden 20 is the floor, that's when you're typically going to see more cracks in the market, more wild swings. But we're not there yet. And as you know, it's impossible to predict when we'll get there, but that's something that we're always watching. And the great thing is that one of our primary focuses at REAP Financial has always been risk management and risk mitigation within your overall retirement portfolio. Another thing we're watching is credit spreads, and credit spreads are at near all-time lows. These high-yield credit spreads you're seeing are basically telling you that bond investors have absolutely no concerns about the economy at this point, and obviously that could change. So that's another thing that we're watching. In addition to any potential rising equity volatility, I'm going to be watching any sort of blowouts in these spreads. But once again, until we see those two things lining up, at this point, we're really not having any concerns. And I'm just going to assume it's going to be a normal path that we've been on for the last year or two. But the good news, once again, at REAP Financial, within your investment portfolio, we have all types of solutions custom built for higher risk environments. So we have Denali, we've got buffered notes, we got multi-year guaranteed annuities still paying well above 5% fixed rates. So we have a number of tools already within many of your portfolios that are positioning you to weather anything that comes at us, any market environment, whether it's a big move up, a big move sideways, a big move down. We have solutions. So as always, try to turn off the news and the noise. Let us focus on the day-to-day within the market as we're staying very vigilant, we're very proactive. We'll be in touch if changes need to be made. As we begin to head into spring here, I wish all the best to you and the family.